I told you this week we'd likely rise on lighter volume. That's exactly what's happening. Again, we're likely moving towards projected target levels on the weekly and monthly charts for the S&P 500. The Dow was initially down surrounding earnings while the S&P and NASDAQ were higher, but the Dow recovered. The Dow was up 0.28%, up 124 points almost. Again, still above that 44,000 area. The S&P above the 6,000 area, 6,000, almost 22. New closing highs on both the Dow and the S&P 500. The S&P was up 0.57%, up 34 points. NASDAQ was up 0.63%. After that big move yesterday, down 0.73%, and the VIX was down 3.42%, down just above 14. Now, again, I talked about a divergence possibly developing with this low over here. I still think that that is probably going to be the case, taking the S&P up to my target range. And then I think you can form some bullish divergences here on the RSI and the MACD and the stochastic. I think we'll see that happen. So I think the rally is going to continue to my objective target levels here on the S&P, getting another new closing all-time high, as I've been warning, predicting that would happen because we haven't reached my target levels yet. But the problem is the 50, the green line, is still above the 200, the black line, and again, suggesting we're in a topping process. But I warned you we could come back to the 200 period because, again, signals turned back to bullish ahead of the presidential election, and I told you we could come back, drop below the 50, bounce off the 50 with the S&P, and move back towards the 200. That has happened, but we haven't yet reached my objective target level. I believe that we will reach the trend line on the monthly time frame and move towards the trend line in the weekly time frame on the S&P, probably into the 6100 range. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please take a moment to do that. I don't have any sponsors, just a direct relationship with you. Please consider partnering with me by supporting the channel today. Thank you for your consideration for that. In a few moments, I'll be talking about the 13 count that we got today on the S&P 500, what that means for the rally going forward. Rising wedge pattern. And Nvidia broke this trend line right here. We have this other one, including the shadow, the dotted trend line right there. It's just above the 50 period. We've dropped 11.20% over the previous 3 days, a little bit lower, intraday low, and then again trying to squeak out a small gain on Nvidia, 0.66% after dropping about 11.25% there. Divergences have played out. I'm watching to see if we get the double top. I'm watching to see if the rising wedge begins to play out here. And if we've topped here at this peak right here, which we're hitting that major trend line in the weekly time frame that I've talked about, we turned right off the trend line there. And again, major trend line not only here in the daily time frame, but also in the weekly time frame. So how does that impact the stock market? Does Nvidia, in fact, top out? There's a possible double top here or a head and shoulders pattern. We can move back to the slow. The semiconductors have a right shoulder on a head and shoulders pattern. Here, this would be possibly a head formation or a double top. It could be either one. Most important trend line in the stock market is this trend line right here on Nvidia and our 20-week moving average. If this trend line breaks again, that's going to be extremely bearish for the stock market. This is a channel of the 2022 low. We have the negative divergences. You got triple negative divergence here on the RSI, and you've got the negative divergence down here on the MACD. You break this trend line, you're reversing, you're confirming, and drop below the 20-week and stay below it. Stay below the trend line. You're confirming reversal off of the trend line in the longer-term weekly chart. Longer-term weekly chart, I should say. Don't forget, we had that 9-count sell signal last week. We had it on Nvidia. We had it on the Bitcoin ETF. We had it on Bitcoin. The sets with the most volatility got these 9 counts. MicroStrategy got one as well. Interesting is Bitcoin and Nvidia, they're hitting trend lines of resistance. APR on Nvidia, the Dow made new highs today. The NASDAQ did not. Quickly, Nvidia has this long-term channel. We're slamming up into it. This is the weekly time frame. We're slamming up into this channel. This is a smaller channel I just showed you. If this trend line breaks, it will confirm a reversal off of this larger, longer-term channel. Right now, this is the most important trend line in the stock market. This trend line right here, because if it breaks and we take out that 20-week, then again, you've got either a double top or a head and shoulders forming one or the other. If it's a head and shoulders, it'll look like that. And then maybe we come up back test or get a throwback towards it. A double top will come down, will break this level, and get a smaller bounce, and then just keep going or something at support there. But breaking of this trend line would be very bearish for the stock market and confirm a reversal off of this longer term rising resistance, the upper boundary of the channel. So the most important trend line in the stock market right now is the trend line here on Nvidia from the 2022 low. Back to bullish for the S&P last week. It turned back to bullish today for the NASDAQ. Told you to watch for green awesome oscillator bars. That happened, but we didn't flip the cloud until today. You see the little blue arrow? It means we got above the cloud right there. The cloud is now flipping back to green. Coming up and filling this gap, but not moving to a new all-time high on NASDAQ that the S&P and the Dow did. We had a short trading week. We're going to be trading here all week on lighter volume. Abbreviated session on Black Friday. Be watching to see what now becomes of this new bullish flip with momentum. NASDAQ join the others and make a new all-time high, or will end up diverging with the S&P 500. S&P through the pullback, the momentum remained bullish here, but we still have the momentum line turn bearish through that pullback. It turned back to bullish last week. I talked about that already. With the intraday signals last week, they all turned back to bullish. Getting new all-time highs on a closing basis. Line of resistance on the monthly chart is right around the 6,040 area or so, give or take. Again, 6,000 area. Like I keep saying, we may even overthrow it and hit the 6,100 area. Now today, the S&P 500 daily chart completed a 13 countdown sell signal. I told you I think the S&P is going to go up and hit this upper trend line and reach my objective target level, monthly time frame, and probably overthrow it and reach the upper boundary on the trend line here for the rising wedge, and the upper boundary for the channel in the weekly time frame. We have a 4 of a 9. If we get a trend extension, an immediate trend extension, we can complete a 13.9. 13 fall by 9, but we have not reached even though we're moving to a new all-time high, closing new all-time high, we're still not at my target level at that mid 6,000 area. We're at the low 6,000 area. And again, the target is right around the 6,040, give or take, maybe as the 6,050 area, right in that range right there. Eyeballing it, as I've talked about, or throw the trend line in the monthly time frame, then you're talking about going into the 6,100 range. I think that we're going to end up reaching this level up here. Nvidia did. It reached the upper end of the rising wedge, and then it reversed. We could see something like that with the S&P. If so, we get bar 4 today. That means we got 5 more bars. If the 9 count does complete, you're looking at 5 on Wednesday, bar 6 on Friday, bar 9 by next Wednesday, if the momentum can continue. Could be that bar 8 or 9 is the high of the count if it does in fact complete. My guess is this is where we're going. I think we advance on the lighter volume here this week. I wanted to make you aware of that 13 count. There's a possibility of a little miniature double top here, but like I said, I think we're going to reach the objective target levels in the weekly and the monthly time frame. The doji spinning top looking candlestick yesterday, I think that's a continuation of the trend. Again, I remain bullish, believing that we are going to hit target levels. And again, while the S&P signals turned back to bullish last week, my signals last week, now we're getting the momentum signals turning back to bullish today for the NASDAQ. To get the 9 count, every bar has to be above the bar from 4 bars ago if we continue higher. Again, these 9 counts, you can get the 9 count, you can go a little higher. Other 9 counts, you can turn immediately. They mark some price exhaustion and lead to major sell-offs or pullbacks or major reversals, which I think is what's coming. Not reached my objective target yet. Now NASDAQ, we had a 13 count over here filling the gap, and we went a little bit higher, filled the gap. It only led to a pullback. I talked about that at the time. Again, we expected a rally ahead of the presidential election. That took us up to a new high and blew past the July peak. I talked about that at the time. We're up filling the gap right here, right now, with a 4 count, 4 of a 9, just like what we have on the S&P 500. And I'm watching to see, does the NASDAQ move to a new high? Does it end up diverging with the S&P? Again, these counts can mark some price exhaustion. Back over here in July, it marked the very top August, we went just a little bit higher. The 13 count, we went a little bit higher, filled the gap, and then had the pullback, forming a divergence with the S&P 500 at this high right here. So again, I'm going to be watching the count here. S&P and NASDAQ, it's a 4 of a 9. The Dow has the same count. I think worth paying attention to is we did get that 9 count on QQQ a few weeks ago. And we pulled back. Again, we'll be watching. Do we make a new high, go a little bit above this area, or does QQQ stop making new highs? Again, the 9 count over here, again, marked that July peak. We went a little bit higher, and then we turned and dropped by about 16%. Well, I think S&P goes higher. It's going to top soon and begin to reverse. We had this 9 count on Nvidia at that major resistance level as well. Lines I've been showing you. Daily chart, on the weekly chart, we turned off of those trend lines. We got this topping tail. So watching Nvidia as it got that 9 count, got the 9 count over here, and it led to this sell-off. Going to be watching this. Bitcoin also had a 9 count in the weekly time frame. Sell signals flashed on Bitcoin on Sunday, now pulling back. Nvidia at a major trend line of resistance, Bitcoin at some trend lines of resistance. If you want to see my latest Bitcoin video, you can see it. I'll link it at the end of this video. Something to pay attention to, because you've got these 9 counts. You got one on QQQ, you got one on Nvidia, you got one here on Bitcoin. Just something we're paying attention to. The Dow is just directly underneath the upper channel of a really nice looking channel here in the weekly time frame as well. Again, the multiple points of negative divergence. We've got the Dow making new all-time highs today. The S&P making new highs, gapping higher, drifting higher here. You can see it on the 15-minute chart, 60-minute chart here on the S&P. Again, yesterday we had gapped higher and pulled back, filled the gap, and then now gapping higher today, and then continuing to move onward and upward. Told you I thought we'd bounce off the gap support here in the 200-period moving average. Near that 20 period on the daily. That was correct. Thought we'd go back up and fill the gap and resume the advance and make new all-time highs. That was correct. It's like I told you back over here, we're going to see this divergence play out ahead of the presidential election and the Fed meeting. We reached extremes up here and we're going to get a pullback. So again, absolutely incredible calls. Continue to believe we're on our way to my target range. We already hit the lower end of the target range in the monthly time frame, including the shadow from 1,000 top. We have the upper end of this target range again in that mid 6,000 area, and I told you if we can even overthrow it and go into the 6,100 level because of the trend line on the weekly chart. Upper end of the range target is that 6,000, mid 6,000 area, and we could go on into the 6,100 area if we reach the upper channel in the weekly time frame. I do think that we're going to reach that monthly trend line, and we could do it here before the weekends on into next week. And again, if we overthrow it, watch that weekly upper channel line. The S&P is headed up to this upper boundary, and that could take us towards that 6,100 area, high 6,000 area, or on into the 6,100 range. We're likely going to see a divergence develop here in the most recent price action. That bounce I talked about off the 20 period. Like I told you, we were going to bounce off horizontal support in the 50 over here, ahead of the presidential election and the Fed meeting. With the sell-off in July, I told you we were going to get eventually new all-time highs. A Fed pivot rally. We had the Fed meeting here, moved to new highs. I talked about moving to new highs. Even though I predicted the pullback, I told you we were going to still move to a new all-time high. We hadn't reached it there. With the Fed meeting, we got a reversal bar. I told you we were going to get a Fed pivot rally. The breakout, the back-tested triangle, bounce off the trend line, all the rest of it. Again, continue to remain bullish. We've called short-term pullbacks, but I continue, here and here and here. Back over here, but I continue to believe we're going to move towards that target level. So I'm watching this upper boundary right here. RSI go and make new extremes here. Does it end up forming a divergence? Again, I talked about these trend lines in the weekly time frame. This trend line going back further again to the peaks earlier in the year. Again, could intersect, and if I exclude the shadow, it will intersect beautifully with the upper boundary of the channel here. These highs over here, these lows over here. Divergence plays out, we'll see the RSI begin to turn back down and go below 50, and we'll get a 20-50 sell signal. We'll drop back below the 20, and we'll drop back below the 50, and eventually get a 50-50 signal where we drop below the 50-week moving average and hold below the 50 on the RSI. Decline over here, we got the 20-50, and that marked a reversal when we drop below that 20-week moving average, and we stay consistently below it. We tried to overthrow it back up a couple times, and those were the pull-ups to the 50 level, or overthrowing it slightly here and pulling up towards it over here and here. Then again, started to consistently see it move into positive territory and remain there as we pull back right over here in first part of 2023 there. So again, I'll be watching for that to confirm these divergences formed on the MACD and the RSI to get a 2050 sell signal and the breaking of this trend line right here. But watching this area closely, this is where I think we're likely headed again towards that boundary trend line, and that could take us above the trend line in the monthly time frame that I've talked so much about, and it could take us into the high 6,000 area, or on into it looks like it would take us, just eyeballing it here, again likely above the 6,100 range. The week right now, in this light trading volume week, we're up 52 points. We're up 0.88% for the week. So again, I think over the balance of this week and on into after Thanksgiving, I think we reached this area. NASDAQ, I'll be watching the weekly chart here. Again, if we go back and try to make a new high, I'll be watching this trend line right here, perfectly parallel trend line from the pandemic low to the 2021 high. You've got the divergences going on already with our recent peak a couple of weeks ago. Sometimes the S&P and NASDAQ diverge from one another. They did back over here at the 2022 high for S&P, and NASDAQ peaked in 2021. Right before it, they diverged. Sometimes they did back in July. Watching to see if they diverge, or does NASDAQ go make a new high. Nvidia has sold off just about 11.25% from the highs. If Nvidia struggles, NASDAQ could struggle as well. We have the MACD also having this divergence in place here in the time frame. Again, momentum signals turn back to bullish today for NASDAQ. They already turned back to bullish last week for the S&P 500. I talked about that. Here we're back above the 10 and 20 on the NASDAQ daily chart. We filled the gap yesterday. Get a close above the gap fill there, the 20,000 at the 20,900 area. We have a really nice looking rising wedge here. I'll be watching. Can we make a new high or not? Or do we end up confirming a lower high on price here? NASDAQ's struggling because Nvidia is struggling, and it follows Nvidia. And Nvidia's reversal with earnings off of major resistance is a huge red flag for the market. Still rise to new highs on lighter volume, so do keep that in mind. But again, watching the rising wedge here, beautiful rising wedge here on the NASDAQ, could form divergences or confirmation of a lower high on the RSI and the MACD. I told you NASDAQ was going to come up and fill the gap. Now again, I'm not sure if NASDAQ is going to diverge with the S&P or make new highs. I think S&P is going to, it's made new highs today. Intraday high yesterday. I keep telling you and predicting it's going to make new all-time highs because it hasn't reached my target level, but I don't know if NASDAQ's going to diverge with it or not. Sometimes it does. Down when I predicted that we were going to get a rally with the election, one of the reasons why was because NASDAQ got a higher low and the S&P moved to a lower low. They diverged. Diverged right here. NASDAQ moved slightly higher. The S&P got a lower high. They diverge at turning points from time to time. We're filling the gap, so we'll be watching. We gapped higher yesterday. We filled the gap down here, and then we gapped higher today, and again, now closing above this gap fill area. And NASDAQ's momentum just turned back to bullish today. The momentum line, we got the bullish reversal of conditions today. Almost have been bearish. Momentum flipping back to bullish. So we'll see if it can make new highs or not. Got the gray shaded area telling us a squeeze move up or down is going to be happening soon. So these clouds drag out a little while, like over here. Sometimes they're shorter, like over here before this sell off. So again, just something worth paying attention to. I think the S&P will go higher, and then we'll see what NASDAQ does. Momentum for the S&P turned bullish late last week. We're getting it on the NASDAQ. Again, likely going to see a divergence develop here on a momentum. Taking out the cloud today, getting a little buy signal there. And the other trend signals have been bullish. Short-term trend, the blue line there, and the green line is the swing move, both bullish still. Warning signs of pullback, but bounced off the 20-day and the daily time frame. We bounced off the 200 and the 60-minute time frame. I thought that was going to be the case. We were going to go back and fill the gap and resume the rally to new all-time highs towards our target levels in the weekly and the monthly time frame. More bullish signals today on the S&P. I remain bullish on the S&P, but I think the time is short. I think it's going to top soon in my target range. Again, mid 6,000 area to that 6,100 area. Okay, the market is moving up on lighter volume as expected. Again, on the short trading week, we have, again, the Thanksgiving Day holiday in the United States. We have an abbreviated session on Black Friday. So we'll have a full trading day tomorrow, and then that'll be it for the week. We'll have an abbreviated session there on Black Friday. Couple of things today. We got consumer confidence coming in a little bit stronger than expected, and stronger than the previous reading. But we got the FOMC minutes today, and then tomorrow we'll get the first revision of the GDP for the third quarter. Expected to come in at the same at 2.8%. We're expected to get the PCE inflation data, I guess, with the holidays, going to be released at 10 a.m. Usually it's before the market session, but we're expected to get the PCE data ahead of the Thanksgiving Day holiday. Will be closed on Thursday and an abbreviated session on Friday. The month over month is supposed to be 0.2%. The core is supposed to be 0.3%. The headline year over year is supposed to be 2.3%. It's supposed to be higher than the 2.1%. And then the core is supposed to come in at 2.8, again, higher than the 2.7. Previously, we saw the CPI come in line with expectations. PPI, the wholesale inflation, we saw that begin to tick up. And we have light trading volume. The institutions, they have gone away for the week, taking an early vacation. So you have the retail investors pushing the market higher. It's drifting higher on lighter volume. The Fed minutes from the last meeting. The minutes show two things that I talked about in my weekend update. First of all, the Fed is focused on inflation. They're not focused on recession, and the evidence is about to start the deterioration in the labor market. You didn't watch my video over the weekend, the last weekend. I pointed out the Fed is doing the same thing that they did in 2007. They're doing it. And again, look at this. Participants generally noted that there was no sign of rapid deterioration in the labor market conditions, with layoffs remaining low. You can't make this stuff up. Are blindsided to what is going on, just like they told us that the inflation was transitory, completely blind to it. A monetary policy mistake, misjudging the inflation. Now they're making a monetary policy mistake, focusing on inflation rather than the recession that is about to start. That's why you're going to see in the coming months ahead, you're going to see when the recession begins. After it begins, the Fed will realize, do an emergency cut. Begin to panic because, again, that's what they do. Remember the jumbo cuts on the way up? They left rates too low for too long. Now they're leaving them too high for too long. Fed doing what they always do, ignoring the data, ignoring what's really happening, and believing their own propaganda of a soft landing. Absolutely incredible. You can't make this stuff up. Now, after the election, Powell, again, November 14th, had that Q&A, and again, there's no hurry to cut rates. And maybe he's concerned about with President Trump's policies or the tariffs of Trump, which I'm going to be talking about in a moment today. Maybe that's causing him to think about this inflation stuff when he should be focused on the recession. About the rise in the yields, maybe it had something to do with it. Again, the fake jobs number, I talked about that. Remember the market. Why is the Fed cutting? We got this great number, the fake number that was revised downward already. Will likely be revised down even more. But the case may be, again, the Fed is making the exact same mistakes that they previously made. And again, quote, there was no sign of rapid deterioration in the labor market, in labor market conditions, with layoffs remaining low. But yeah, we've made 838,000 jobs left. 838,000 less jobs have been created in 2024 than 2023 in the first 10 months. And I went through it 2007, this is exactly what we saw. We saw 900,000 plus fewer jobs created in the 12 months, and we're not there yet. We haven't completed the year out. We have 2 more months worth of data to get, November and December, but we have the first 10 months up to October, and it's showing exactly what happened in 2007. And the Fed is just completely oblivious to this. I don't know why they don't see it. They didn't see it in 2007 either, and they're making the same monetary policy mistakes. So just wanted to point that out. We got the FOMC minutes today. They expressed uncertainty where rate cuts should be taken, that either boosts or restrains growth. Again, still focusing on inflation, and they're about gradual cuts. Slashing rates right now. They are totally making a monetary policy mistake, and they're going to have to make up for it later. That's why we're going to see jumbo cuts in the coming months ahead. These guys finally figure out that their soft landing nonsense isn't going to happen, and that we're actually moving into recession, which they caused. They caused the inflation. In addition to the Fed, the current policies that are in place are going to trigger a recession, and we already have the recession indicators warning us about that. And the reason why it hasn't hit, because the government's spending over $7 trillion a year artificially propping up the economy, and that's why. Right now, ahead of a recession about to start, the Fed thinks it's appropriate to reduce the monetary policy restraint gradually. If the economy is stronger, there's no signs, weakness in the labor market, and telling us, there's no hurry to cut interest rates. Absolutely incredible. This could be one of the things. Initially, futures was down, had a knee-jerk reaction right after I made the video. President Trump announced tariffs, additional tariffs, 10% on China, 25% tariff on Canada and Mexico, day one when he returns to the White House on January 20th. The markets initially had a negative reaction to that, but then recovered at new record closing all-time highs for the Dow and the S&P. And let me just say this, Wall Street we're seeing the rally, the presidential election results rally, because Wall Street loves President Trump's economic policies, but Wall Street hates Trump's tariffs. Some volatility surrounding that in 2017 and 18 a little bit. Maybe this is going into Powell's thinking of inflation.